All right, guys, crude oil getting ready to start here. And of course, as you know, if you've been doing this for a while, we'll see the reaction. If you've never done this or seen this, it's quite a sight to see. If you want to see how markets behave when a major release comes out, this is one of the true red labeled reports. I remember when the crude oil report was orange labeled. So just to kind of remind some of you, if you don't know, this is the 377 tick chart with Counterpunch Trader. You could be trading this with Spotlight as well. Certainly a viable strategy and trade plan. That one works well, and you might be interested in the unleaded gas. But I've been using Counterpunch for a long time, so if it ain't broke, don't fix it. We have some people in here use the 610 tick chart as well. So different ways to do it. I stick with what I've been successful with for so long. So we wait 2 minutes after the release and we look to take a trade. So if you've never done this before, I do not recommend that you try to trade it live, but you should maybe be trying to practice it in a sim account, because the more practice you get with it, the better. Executing is critical. I'm going to be doing my typical, struggle with think or swim. That's what I use to execute these trades. Easier to use TradeStation for sure. But I just keep doing what I do because it's what I've been doing for so long. So there it is. Came out a couple seconds early compared to the computer clock there. Big, huge spike. Let's mark the boundary of that upper range. Let's see if it can exceed that. This is right around where it began, so we'll put that boundary in there. So far, we're right in the middle of the range of the initial reaction. So that obviously is not what we like, but it's still early. We want to see it push and get past this range from 69 to 60, 50, 55 cent range, something like that. Not a lot of room, but a lot could happen in the next minute or so. Coming up to test this upper boundary, there's only been one setup, that short trade, and technically that short trade is still valid. It hasn't stopped out. It hasn't hit its money management level. Unusual to, be thinking about that, but we do have 30 seconds to go. Let's keep an eye on that. 69.34. Looks like there'll be a new short because of those dots if there is a short trade. 69.34. All right, so there's a short trade. That's the first trade, 69.39. And it's targeting 52. The stop's at 52. It's a small trade. You have to go to target 3, 69.26. Let's hope we get a better setup, but that is the first trade so far. And very tight range here. Is it going to try to test that upper end, or is it going to start to move lower? We're below the signal line still, a lot of closes below the signal line. This is a
order filled.
Well, just got filled. So getting short, and money management is at 69.30. Can we get there? Might find support at the 50. We got to push through it. Let's see if we can push through it. Almost at money management. We've gone as low as 31. Money management is at 29, not 30. I said 29. I said 30, but money management's at 29. Target 2 is at 30. 10 ticks is what we want, but the market doesn't always give us what we want. That's the minimum of what we want, right? We're trading inside of the range. So far, not very impressive. Let's see if we can test that lower swing level now. As long as we live above that 50 moving average, I'm nervous about the shorts. Trying to push through. All right, let's see. Give us a couple more ticks. At least there it is.
Filled.
All right, so that should be full target, and it is. Make sure you lock in your 1 tick. And actually, the trailer now should be at 36. Remember, we have to do this manually. Just like I was talking about earlier, we're going to trail that signal line 2 ticks above. It's 35 plus key level adjustment. So 36 is the stop. Let's see if we can push lower and test the lower end of this range It's gone about halfway. It's right in the middle. Well, looks like we're still hanging in there. Can we hang in there? And still hanging in there. The key level adjustment keeping us alive, guys. Let's see if we could push lower. Stops at 36. That's why we do key level adjustments. Call it a coincidence. So far, it's kept us alive. We still might stop out at that level, but we still also have a fighting chance to go lower. And we can't move the stop because it closed above the signal line.
Order filled.
So we're done. The trade's over. Too bad. But you know what? A tight range. Take what the market wants to give us. Can't get more perfect than a target that goes through it by a tick. And then our protection gets us out and we're done. That's it, guys. One and done again. And a very successful session. There you have it.